If the inflation is too high, RBI is likely to buy government securities. Now, this is also a prominent question. It keeps repeating every now and then. They will keep asking. If there is inflation in the economy, then what RBI will do? See, RBI will announce on 25th or 1st March, I am planning to sell government securities. Sell government securities. Whoever interested, come and buy. So, 1st March, SBI is going, let us assume State Bank of India is going, buying 10,000 crore worth government securities. ICICI Bank is going and buying 5,000 crore worth government securities. Right? Why these banks are buying government securities? Why should they buy government securities? Because they can use it for their SLR requirement, statutory liquid ratio, yes or no? Second, using this, they can borrow under repo, yes or no? Under repo, they excess government security they have, they can mortgage and borrow. So, and moreover, anyhow, whenever it is also going to give them some interest, 6-7%. So, as of now, they can buy whenever auction. Now, SBI has gone. And who has given money to whom? These banks have given money to RBI, yes or no? Say SBI chairman would have gone with the 10 suitcases full of crores, 1000 crore, 10 suitcase. He goes and submits, then RBI manager gives him one, say 10,000 crore worth security, right? ICICI chairman goes and comes with 5 suitcases of cash. 5,000 crore handed over, then one government security worth 5,000 crore. Now this security just they are coming back, they have handed over cash. This cash otherwise would have come as education loan, housing loan, car loan, bike loan. But that money has been absorbed, sucked out, taken over by RBI, yes or no? So whenever there is inflation in the economy, RBI will sell government security so that they can take over the money. Okay, this part they are all UPSC checks. Whereas whenever there is a recession in the economy, dullness, they want to push more money in the economy. At that time, instead of selling, RBI will say, I will buy security boss, come sell. Now when RBI buys, RBI will give cash, yes or no? Now, SBI will come with suit with briefcase, small briefcase, one government security they will give, and RBI will give 10 suitcase cash, they will go back, huge cash is going to enter as car loan, bike loan, housing loan, education loan. More money enters the economy, demand increases, then economy can come out of the recession, right? So, here what is the answer question they are telling? Inflation is too high, RBI is likely to buy government securities. If RBI buys, who will pay cash to whom? RBI will pay cash to, when RBI buys, yeah, RBI pays cash, then more money is going to enter the economy, boss. Then it is going to further cause inflation, nah? Then then this statement cannot be right? Yes or no? Yes or no? Let us go to the exam mindset. One is removed means yes or no? Answer 2, na? See, I am so happy whenever this 1, 2, 3, 4, 5 immediately become happy. Okay, immediately we can arrive at the answer. If the rupee is rapidly depreciating, RBI is likely to sell dollars in the market. Now, I told now there are 2 types of exchange rates. One is used to be fixed exchange rate, where government used to fix. Yes. 1944 Bretton Woods Conference till almost 1971, in fact India till 1994, that and all is economic class. But no, there was a fixed exchange rate. Now market is deciding the exchange, 82 is equal to $1, 83, 84, 85 or 81, 80, 79, market. Third one is called managed exchange rate. That is, this exchange, market exchange rate is also called as floating exchange rate or flexible exchange rate, right? These are all flexible exchange rates or floating, like a river floats up and down, it keeps changing. 82 is equal to $1 become 83, 84, 85 or 81, 80, 79, 78. Now these are all market or flexible or floating, it is the same. But here it is not market, but again it is not fixed. In the market exchange rate, our RBI governor secretly goes, wears a Spider-Man mask so that no one sees him. He becomes, silently enters and does some dirty job. So he is managing the exchange rate, that is called managed exchange rate. So it is also called as dirty float. It is not floating, dirty float. Yes or no? Okay. Now what they are telling, boss, when rupee is rapidly depreciating, RBI will sell dollar or no. Now 80 is equal to $1 becomes 81, 83, 88. This is called rapidly it is going down. So RBI governor is saying, boss, what is happening? Market? Yes, it is market exchange rate. RBI should not intervene in a market exchange rate. So he wears the Spider-Man mask so that no one sees. He enters. He has a balance of payment reserve. Okay, lot of foreign currencies. Almost now 500 billion he is having. $500 billion worth he is having. He goes, takes some, say $1 billion and he sells it there. Moment dollar enters, he is selling. Automatically, if tomato price is continuously increasing, 30 rupees, 40 rupees per kg, 50, suddenly government comes and pumps lot of tomatoes. Tomato price will come down, supply increases. Similarly, dollar suddenly enters the economy. Dollar is not entering economy because if we export more, dollar will come. Yes or no? If we export more, dollar will come. If Ford, Hyundai, Nissan come from outside and invest in our country, foreign direct investment, then also they will bring in dollars. But nothing has happened like that. That and all is market. Our governor has gone with a mask and started selling dollars. Availability of dollar, so 85, 86 becomes, more dollar is entering, 84, 82. He is stabilizing the dollar, dollar versus rupee. Yes or no? So this is one thing. If the rupee is rapidly depreciating, RBI is likely, yes, it's an answer, yes or no? Yes or no? And if interest rate in US or European Union were to fall, that is likely to, RBI is likely to, that is likely to induce RBI to buy dollars. Now what happens? What happens? Interest rate there increases, na? If interest rate in USA or European Union were to fall, it falls there. Now there is one Warren Buffett. He has huge money. He is sitting in US. He has lot of dollar. But interest rate in US is falling. So Warren Buffett, George Soros, old man, these are all old people, lot of money they have. So they are seeing, boss, if I invest in US, only 2% interest. India, 5%, 6%. Then they will come to India with their dollars. Yes or no? Lot of dollars are going to enter. Lot of dollars enter means market is deciding this. 80 will become 79, 78, 77, 76. Yes or no? Then what RBI governor will do? Boss, exports will become a problem now. Exporters will earn less hereafter. Importers will become happy. 76 is equal to $1, 75 is equal to $1. But exporters like Narayana Murthy, Infosys chairman, all will cry. No, he is not Infosys chairman. Infosys major shareholder. Now they are all worried because hereafter their earning will come down. So he enters again with a mask, Spider-Man mask, and now starts buying dollar so that he can keep it in reserve. Once he also starts buying dollar, 77, 78, 79, 80, then he leave it, remove the Spider-Man mask and go to RBI governor's chamber. So these are all managed floating. Now comes the question with reference to Indian economy, consider following. So yes, 2 and 3 are right. Answer is B. Yes or no? the money multiplier in an economy increases with which one of the following 2021. But again it is a repeated question, this money multiplier, I don't know why they like. See, what is money multiplier? Money multiplier means money is multiplying. The same money is, what is multiplying? Same money is going here, everywhere it can go. Now, say you are having, say 1 lakh rupee. You are going to the local Karol Bagh branch, depositing. You are not keeping it at home. Okay, you don't want to keep it in your room. You are going and depositing in the local SBI branch, Karol Bagh or Old Rajendra Nagar. Okay, you are deposited. Now that 1 lakh SBI manager is having, then suddenly someone is coming, one small scale, one bookshop, voila, they need loan. So what they are doing, a lot of bookshops are there. They go to that SBI manager, sir, I want loan. How much? 1 lakh loan. Okay, take it. He is giving 1 lakh loan. And that 1 lakh also to his account only he is giving. Right? Now that book manager, bookshop owner gets 1 lakh loan. With that he buys books. Lot of books he will buy. Now for that he will send it to someone else. Okay, the book vendors, book printers, publishers. Now they in turn, see your 1 lakh how much it is multiplying? Yes or no? Yes or no? This is called money multiplier. But let us assume you got that 1 lakh in Old Rajendra Nagar, in your room, you have locked, put that cash, 1 lakh cash, you have kept it in your briefcase, suitcase, almirah, locked it, put the key and started studying economics. What will happen to that money? Will it multiply? No. Okay. So, how money multiplier? The one formula they give. 1 plus C divided by C plus R. Now, this C is how much people can deposit in the bank. Okay. Reserve is, there are two things, cash reserve ratio, statutory liquid ratio. These two. Now, whatever you deposit, you have deposited 1 lakh, na? Yes or no? But as per cash reserve ratio, from that 1 lakh, 4 to 4 and now 4%, na? They 4.5, they have to keep it with RBI. Yes or no? 4,500, they cannot give it as loan. Then, and in that 1 lakh, another 18,000, they have to keep it with themselves. SLR, statutory liquid ratio. So balance how much? 18 plus 4.5. Let us not have 4 and okay, 4%. I'll take 22%. So that easy to calculate. So that 1 lakh rupee, how much money can be given as loan? 4% CRR. Okay, just for mathematical purpose, and 18% SLR. 22. So only 78,000 can be given as loan. Yes or no? Then money multiplication will be less or more? Less. They are increasing the CRR to 10%, SLR to 30%. So total becomes 40. The reserve ratios are increased. Then only 60%, 60,000 can come as loan. Yes or no? Then money will be multiplying more or less? Less. So remember this, with this you can answer all questions. So they'll give the formula somewhere. Yeah. See 1 plus, where C is the currency deposit ratio. You are going and depositing, na? If you are not depositing also, money will not multiply. You are keeping at home also. And so it all depends on the country where you live in. In some countries they don't keep it at home at all. They have the habit of banking. They keep it in bank. Countries like India, usually people prefer to keep it at home rather than keep it in bank. So then currency money multiplication will be less. Only if it goes to bank, it can multiply, to different hands. Now coming back here, the money multiplier in an economy increases, means money will be multiplying more. If increase in CRR, If CRR increases, money will be multiplying more or less? Less. Because banks cannot give it as loan, they have to keep with RB. Increase in SLR, bus, same, it cannot multiply, the bank has to keep with themselves instead of giving it as loan. Increasing banking habit of people, yes, C, 1 plus C divided by C plus R. Okay, formula and all they won't ask, just they will ask this. Then increase in the population of the country. So because of population, how money multiply? No. So answer should be C. Is it clear? Yes or no? They are asking this money multiplier again and again. Another question also comes. If RBI decides to adopt an expansionist monetary policy, which one they will not do? Okay, means expansionary means they want to increase money supply. Contractionary means they want to reduce money supply. When they will expand the money supply? Whenever there is recession in the economy, they want to open all the taps and pour money into the economy. So that is expansionary. Whenever too much inflation in the economy, then they will have pump sets to take out the water and take out. Okay. So at that time they will increase repo, increase CRR, increase SLR, all those things. If the RBI decides to, now they want to open the tap, expansionist policy, which one they will not do? Many times in the exam hall, 2 to 3 questions every year, if you don't read that proper, mostly you will be answering which one it will do. That is our, so always read the question whether not is there, incorrect is there. With that 2 questions usually, whether you are able to read it properly, the UPSC wants to check. Now, cut and optimizes. Cut means reduce. Yes or no? RBI decides to adopt an expansionary monetary policy. Will they cut? Will they cut or no? They will cut. So it will not do means, then this is not the answer, right? So since it is there, immediately we will see. Answer is, we have arrived, yes or no, because one is there in A, C, D. Why to read unnecessarily and waste our time? We should jump on to the next question in the exam hall. However, for academic reasons, let us see, increase MSF rate. When they want to expand monetary supply, if they increase the MSF rate, interest rate, money supply will come down. So they will not do that. Yes or no? Cut the bank rate and repo rate. Yes. So answer should be, it will not do means 2 is they will not do. Are you following? And cut the bank rate and repo rate. Cut SLR, that and all they will do. Is it clear? So answer is B, right? So we have seen, yeah, SLR, MSF, this particular question we have seen. Someone was not knowing, sir, what is this SLR, CRR, bank rate, no, that and all we cannot explain. But you have not knowing anything, something they are saying repo, reverse repo, somewhere confused understanding I have. Then I will give you one formula. Just if you know this, 2 questions you can answer. Just you can write CRR, SLR, bank rate, repo rate, reverse repo rate, MSF rate, SDF rate. This is a new thing, standing deposit facility, just know that. Now all these rates, if RBI increases, always remember it is to fight to fight inflation. The same CRR, SLR, bank rate, repo rate, reverse repo rate, I don't know anything, no problem. 2 questions you will get it from here. MSF rate, SDF rate, am I leaving anything? CRR, SLR, bank rate, repo, reverse repo, MSF, SDF rate. If RBI reduces it is to fight recession. Just you remember 2 questions, you will get it from this. Definitely. Just you remember, whenever they increase, it is to fight inflation. Whenever inflation is there, they will increase the rate. Whenever recession is there, it will reduce the rate. Even this is also difficult for you to remember. I will tell you another thing. Increases start with alphabet I, inflation starts with alphabet I, reduces start with R, recession starts. At least remember this so that you can remember this. But one exception is there. The reason for me putting this is that exception UPSC has never asked, however suddenly they ask. Okay. Only one exception is going to be there, but they have not asked in last 10 years, 12 years paper. Okay. That is in this MSF rate on, all of you should know bank rate and MSF rate are same now, means the number is same. Okay, bank rate is for long term loans which RBI charges on its clients, that and all you are supposed to know. Even if you do not know, just remember this formula. But what that exception is, in that say MSF rate, in MSF rate, that rate also whenever RBI increases they will fight inflation, whenever they reduce RBI will fight recession. But that exception is that margin is there na? Now it is 2.5% I think. Okay. Anyhow, numbers they won't ask, don't worry. That margin is, let us assume now it is 2.5% of NDTL, net demand and time liability. Now that margin means 2.5% of their NDTL they can get loan, okay, by pledging SLR government securities. Yes or no? Under repo, only excess government securities. Whatever they have kept for SLR, they should not use. Yes or no? Whereas under MSF, they can even pledge SLR government securities. Now that SLR government securities, they can pledge and get loan. Agreed or no? Now comes, so let us assume our say SBI's NDTL, just like that I am telling, it will be thousands and thousands, but I am telling let us take it as 100 crore. 100 crore is the SBI's worth. Then from that 2.5 crores, they can get it as loan by pledging SLR government securities from RBI. Yes or no? Now if there is too much recession in the economy, what RBI thinks, I will increase the margin, boss. I will increase the margin to 5%. Okay? Okay. So, latecomers, just remember those who have not understood anything, CRR, SL. Yeah, latecomers, what I was telling them is, if you don't know anything, sir, I have not studied SLR, CRR, something they keep telling here and there. No, then use this formula. Whenever all these rates, if RBI increases, it is to fight inflation. All these rates, if they reduce, it is to fight recession. This is the standard. With this, you can answer 2 questions. Now, a particular thing I am discussing now, which UPSC has not asked in last 10 years, but suddenly they may ask, because RBI keeps doing that. Now, when there is too much recession in the economy, okay, Yeah. So, whenever, I will repeat, whenever there is too much inflation in the economy, RBI will increase. This is a one standard formula which you can by heart. Whenever they increase, RBI will fight inflation. Whenever they reduce these rates, CRR, SLR, bank rate, repo, reverse repo, MSF, SDF, they will fight recession. Only one exception which UPSC has not asked, but RBI does. Whenever there is too much recession in the economy, RBI increases to fight recession. Usually increase to fight inflation, reduce to fight recession. That is the standard formula. When all these rates, they will increase to fight inflation. All these rates, they will reduce to fight recession. IIRR. But in case if there is too much recession, RBI will say, boss, instead of 2.5%, SBI, come. I am ready to give 5% of your NDTL. You can pledge SLR government securities. Means if SBI's NDTL, net demand and time liability is 100 crore, earlier only 2.5 crores they can get it by pledging SLR government securities. If they increase the margin to say 5%, 5 crores they can get, more money can enter the economy, yes or no? Then RBI increases by to fight recession. Again, during COVID time, 2021 or 2020, 2021, at that time period, what RBI did is, from 2.5% they increased it to 3% of NDTL. Means up to 3% you can borrow, bus. Okay, up to 3%. Even SLR government securities you pledge and borrow, because they wanted more money to enter the economy. There was a recession. Then once inflation started, then what they did? They reduced the margin. Reduce the margin only, not MSF rate. Please don't confuse. Only the margin. Say, let us assume they have reduced the margin to say 2%, means hereafter out of in your 100 crore only 2 crore you can borrow. Only less money is available. This is to fight. This is to fight what? Inflation. RBI reduce to fight inflation. I hope you are not confusing yourself. I am just talking about margin, not MSF rate. MSF rate is the rate of interest charged by RBI. Yes or no? On scheduled commercial banks. Everywhere they will use the word clients. Only in MSF they use the word scheduled commercial banks, because they only maintain SLR. Yes or no? That is why this particular SLR, SLR government security you can pledge and borrow, they say, because scheduled commercial bank maintain that SLR. But this margin is increasing, margin is how much you can borrow in this rate, up to 2.5% of NDTL as of now. During COVID they increased it to 3%, so that more money. So only this margin. But in case if you are confused, I hope, are you understanding what I am saying? Yes or no? But they have never asked this till now. Okay. But suddenly, but RBI keeps doing this. Suddenly if they ask, this is margin. But MSF rate as usual, it fits in our formula. Is it clear? No. Okay. Have you understood this? Yes or no? These two are understood. Now, what is the MSF rate? The rate of interest charged by RBI on scheduled commercial banks for whatever they borrow. For under repo, what they will do? They will go and pledge the government securities. Yes or no? That government securities, whatever under SLR, 18% of NDTL, they have to keep with themselves. There they can keep the government securities. Yes or no? That government security can they pledge under when they go for repo? When they go and borrow for repo, repurchase option, they will go and repurchase. First they will pledge, later they will go and repurchase, right? When they pledge, can they pledge whatever they kept under SLR, under repo? No, they cannot. Okay. That is why it is called repurchase. That in the repo option, whenever these banks go and borrow from RBI, they have to pledge a government security, na? GSEC, government security. That government security should not be what they have kept under SLR. Under SLR, they could have kept some 18%. For 18%, they can keep in government security or gold, or even they can keep it in cash. RBI should, bank should keep with themselves. They cannot give it a loan. That particular they have to keep. CRR, that cash they will keep it with RBI. That also cannot go as loan. Now what I am saying is, under repo, when they borrow, when they borrow from RBI, these banks should go and pledge government security. Pledge means as a collateral they have to keep, but they cannot touch that SLR. Okay? SLR government security they cannot go and pledge. Anything they have bought other than SLR, they have something in excess, only that they can go and pledge. Is it clear? Now that is repo. Whereas under MSF rate when it was introduced, somewhere in 2011-12, because 2008 there was a global economic crisis, 2011 second global economic crisis. So RBI thought, okay, but RBI wanted to pump in more money because recession may hit India, globally it has affected. But what to do now? Under repo option they cannot borrow more because they have to keep pledge government security only excess, not the SLR they can touch. So RBI came with a new idea. Okay, come, because there is a recession, I am going to give you one concession. What? Even under SLR, whatever you have kept, government security, that also bring in. Are you understanding? That is why this is MSF. One margin of 2% or 2.5% of their NDTL, they can borrow by pledging SLR government securities. Whatever they have kept under SLR, okay, that government security they can go and pledge. But they cannot pledge all that 18%. For that there is a limit, a margin is given. What they told? What is your net demand and liability? Means total deposits. How much you are having? Sir, I am having 1000 crores, sir. Oh, in that 2.5%. For 2.5% of 1000 is 25 crore. For 25 crore you can borrow using by pledging what? SLR government security. And for that rate of interest they charge is called MSF rate. Have you understood? That MSF rate will be higher than repo rate. Yes or no? MSF rate is a short-term loan. Short-term loan. Repo is also short-term loan. Repayment should be mostly within a year. But both are short-term loan. But repo rate, whereas bank rate is a long-term loan. Okay, for long-term loan they charge higher interest rate, short-term loan lesser interest rate. Whereas even though MSF rate is a short-term loan, what RBI told? No, you pay long-term loan interest. Then the banks ask, why sir, why you are asking long-term loan? This is a short-term. Are a useless fellow, you are pledging SLR government security only here. Yes or no? Excess means okay, just I am giving you a privilege. SLR only you are going to mortgage. Whatever you have to keep it for withholding the bank. In case if some bank run people come, you should have some money to disburse. Okay. So that is why the interest rate is slightly higher for MSF. It is equivalent of bank rate. Now, this formula you have understood, na? When MSF rate is increased, whenever there is inflation, RBI will increase the MSF rate, that rate of interest. Whenever there is recession, they will reduce the rate of interest. But this margin I am telling, how much you can borrow under MSF rate? 2.5% of NDTL, 2%, 3%, like that, they will fix it and they can keep changing. During COVID time, the margin before COVID, 2.5%. Then they thought, boss, COVID has come, money is not there in the economy. So, okay, let me increase the margin to 3%. Let us assume 5% if they increase. Then how much they can borrow now? 5% of their NDTL. Yes or no? Means if NDTL is 1000 crore, year after 50 crores they can borrow. Yes or no? Then more money will enter. So, they will increase the margin when there is a recession. Only this margin alone I am talking. Now you have understood? No?
Sir, like the concept of MSF, I understood, like how this margin comes, I didn't understand that.
You cannot understand. This margin, okay, MSF, you have to borrow, you have to pledge government security. But there is a limit on MSF. Limit means you cannot borrow as much as you want. Under repo, you can borrow any amount as long as you have that much government security excess, not what you have kept under SLR. Any amount. If you have some, SB is having some 5,000 crore worth excess government. Excess means what they have not kept under SLR. 5,000. That entire 5,000 crore government security they can go and pledge right royally, and RBI has to give. No choice, RBI has. Okay, there is no limit. You have to give means you have to give. That is what is repo. That is under RBI Act. They have every right. They will go and pledge, RBI will give. Whereas MSF is a privilege given by RBI. Means because they are going to pledge SLR government security. Whatever they have kept under SLR, some government security, that they can go and pledge and get money. For that they give a limit. That limit is called a margin. That is why it is called as marginal standing facility, standing on loan facility. That is, they are saying, let us assume only 1% of your margin you can borrow by pledging SLR government security. 1% of your margin, let us assume your NDTL, total deposits, net demand and time liability, 1,000 crore SBI has. Okay. In that, 1% of 1,000 crore is 10 crore. So, up to 10 crore, you can even pledge SLR government security. That is the margin. Now, if there is too much recession, then they are telling from 1% I am increasing to 10%. Means hereafter 10% of your NDTL means up to 100 crore you can come and borrow. Are you understanding? So, if they increase the margin, more money will enter the economy, then that will fight recession. If they reduce the margin, less money will enter the economy. Yes or no? Only this margin part anyhow. Don't worry. After the class, I will explain if you still have doubt. Another thing, UPSC has not asked this till now. Okay? This formula, okay, because this alone I will teach 2.5 hours for economy students. This alone, okay. In fact, little more because each one is a big concept, okay. But because it is just a question discussion, I thought I will give you this formula, right. This alone is more than enough for answering 2 questions. This part they have not asked, okay. But however, after the class, you can come, I will explain. Scheduled commercial banks, I normally all these things, even they talk, it is for clients of RBI. Who are the clients of RBI? The clients of RBI are government. Government also borrows. Financial institutions, cooperatives. Okay. Now, also scheduled commercial banks. Cooperatives, non-banking financial companies also, NBFC. Now, all clients, they can go and borrow under repo, they can go and borrow under reverse repo, they can go and borrow under a bank rate. Are you understanding? Whereas, when it comes to MSF, they will say, boss, this is applicable not to all clients, scheduled commercial banks. Why? Because only scheduled commercial banks in this client list, government is not maintaining any, why government has to maintain SLR? What is SLR? Statutory liquid ratio, where what is statute? Law. As per law, you have to keep a particular amount with yourself. Okay, as for cash reserve ratio, you have to keep it with me. I am talking from RBI point of view. I will keep it, give it to me, cash 4%, 4.5%. Another, you keep it with yourself, don't give it as loan. So, that is statutory liquid ratio. Now, non-banking financial companies don't have, financial institutions. So, this is MSF rate applicable only for scheduled commercial banks. Is it clear? Yes or no? Right? So, this alone is important. I don't think I am rushing. Each one is worth half an hour. I only teach economy for officer science academy students. So, each I know how much but just we are discussing questions. I cannot explain everything now. I can understand MSF because MSF I will teach 25 minutes how it operates, lot of things I will give inputs, but here anyhow I will try to explain after the class for you. See, again money multiplier question has come. Money multiplier means, what is that? 1 plus C plus R means people should deposit in bank, reserves should be as less as possible, cash reserve ratio SLR. Only if it is less, more money will be given as loan. So increase in cash reserve ratio, no boss. Increase in banking habit of the population, yes boss. People should not keep it at home, they should go and deposit in bank, then only it will go out as loan. Increase in SLR, no boss. Increase in population, no boss. So every alternate year you are seeing a question on money multiplier. The answer is banking habit. Then in that case, repo, reverse repo and all, then many things maybe you could have, maybe I was just, in fact I was thinking I am bit slow explaining concepts and all, okay, that was my, but however I thought when they come they should learn something and go, related only always come, repeat. So you should be answering, but still I was pricking in back of my mind whether I am too much explaining. But in class, in fact, I will explain more because that is class. But now I am seeing if you are not understanding difference between MSF, then before questions also, maybe I was suddenly telling fixed exchange rate, this rate, okay. This is just question answer discussion, so I cannot explain. Already I was thinking I am explaining further because people who know already may think why this useless fellow is telling whatever I know. I came to this, attend this class only for knowing questions. Why he is explaining this much? But I thought someone when come, they should get something which will be a tool for your in the exam. That's why I was teaching you my exam technique also. 1, 2, 3, 1, 5, whatever, whenever I will catch that and use to clear prelims. So only I thought something they should gain out of every class. So in case if you have not understood, please that part, earlier part in case if I was a bit, I assume certain things, okay. Yeah, which one of the following is not the most likely measure? Always read the government government or RBI. So nicely they have taken, means both have. Only RBI they cannot touch taxes. Only government they cannot touch interest rates. Only government expenditure government can do. So always see that also. Whether monetary they are asking, fiscal they are asking. Here they are, whether monetary, fiscal, don't bother. That is what UPSC says. To stop the slide of Indian rupee. What is slide of Indian rupee? 80 is equal to $1 becomes 81, 82, 83, 85, 88, 90. Rupee is depreciating, losing its value. What measure they can do? Right? Curbing imports of non-essential and promoting, which one of the following is not the most likely measure. Okay. So answer is, are you understanding? They will not do. Yes, they can curb imports. 80 is equal to $1 becomes 81, 82, 83, 84. If we further import more, then we need more dollar to import. Then further demand of dollar comes. Then further 85 is equal to $1 become 88. Yes or no? So we have to curb import. So that is a likely measure. Yes or no? Encouraging Indian borrowers to issue rupee denominated masala bond. Now what is masala bond? See, when companies go and raise money from outside, okay, that is, see, each one is worth so much explanation. Okay, I am also suppressing myself because we have to complete at least whatever basic concepts. Now bond means whenever the more than a year government wants to raise money, it's a loan government is taking, just think like that way. So that if we are raising from say London stock exchange, somewhere we are raising money, when Indians are going and raising money, that is India is known as masala, okay, we are a masala people, Okay, so masala bond they have given. So that easily attractive to foreign people, na? Oh, masala bond is saying. When Japan went, they told Japanese, it is what they call sumo, not sushi, sumo bond, I think, I am not sure. Chinese, when they went and raised money, it was called dim sum bond. Okay, dim sum. So to attract, to give a name, like cyclones, they give a name, na? So that people will get awareness. Similarly, they give a name. Now, so when Indian borrowers go and raise money, dollar is going to come, na? Why rupee denominated masala bond? See, I can explain. Again, masala bond, then I have to go. See, rupee, they are going to raise dollar only. But let us assume today rupees 80 is equal to $1. We have raised, someone is buying that bond for $1,000. Okay, in London, one Tony Blair, okay, one citizen of London, England, is buying that bond, $1,000. Okay, he gives $1,000, that $1,000 comes here. Using that $1,000, we will build railways. For railway, they IRFC once did that, like many people do. Using that money, we will build whatever infrastructure. Okay. Now, when we repay, usually we have to give him $1,000 back, of course with an interest rate. Yes or no? That bond usually carries a interest. Okay. That interest is also called as coupon. That interest is also called as coupon. Okay, one interest is there. Now, but in case if when India replaces, we have to replace 1,000, give back. When we give back, we have to give back $1,000, na? Yes or no? When we got, how much we got? $1,000. When we got 80 rupees is equal to $1, means how much we have got? 80,000 rupees, right? When we give back, of course, with the interest on 10%, let us assume, 1,000 plus 10%, $1,100 we are returning means, we have to give it, we are supposed to give it at 88,000 only, yes or no? But, in case at that time, rupees 90 is equal to $1, then we are at losing end, boss, yes or no? In case if it becomes 70 is equal to $1, one who gives, he is getting $1,000, but when he got that $1,000 equivalent 80 rupees he has paid, yes or no? No, only he will get. So, it is decided by the exchange rate also. Whenever they use the word rupee denominated, means, say dollar only we are raising, but we are raising dollar at a fixed rate of 80 is equal to, at the time of borrowing, we are saying 80 is equal to $1, boss. You know that, na? Yes, sir. Tony Blair will say, yes, 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 okay. With that we are getting $1,000? Yes. When we are repaying, whether it is 90, 100, I am not bothered. I will only give you 80 rupee equivalent in case when we are repaying, at that time it is 90 is equal to $1. Then we won't give $1,000 at that time. Then 80 is equal to $1, maybe let us assume $0.9, right? So 0.9 into 1,000, $900 only we will be giving, but with it. So this exchange rate risk they are taking. Who is taking? The bond buyers. Are you understanding? Yes or no? Okay, but that much and all they don't ask in UPSC. Don't worry. Just to know, encouraging Indian borrowers to issue masala bond means dollar is going to come in. If dollar comes in, 80 is equal to $1, 85 has become 85, then it will become 84, 83, 82 only, more dollar coming in. So good for the economy, means which will stop the slide only. Yes or no? But what they have asked in the question, government will not take, government or RBI. So this they can take. Easing conditions related to external commercial borrowing. External commercial borrowing means when government of India takes loan, it is called bilateral loan. Okay, when we are taking from US, when we are taking from United Nations, World Bank, it is called multilateral loan. When we are taking from US or Japan, bilateral loan. And government as a sovereign authority. However, if Tata company is taking a loan from some foreign bank, okay, then external commercial borrowing, because Tata company is not sovereign authority, na? Yes or no? So in your balance of payment, you can see bilateral loan, multilateral loan, external commercial borrowing, then grant, all these things will come. Okay, that is one big class. But I am telling just for you to. So if, and one thing, if government takes loan, it is loan. If government of India borrows, it is called loan. If companies like Tata, Adani, Reliance borrow, it is comes under ECB. Yes or no? Yes or no? Then suddenly if they ask a question, if public sector undertakings borrow, say BHEL is borrowing, whether it will go under bilateral loan or under ECB. Why? Because they are commercial. See, they are not sovereign authority, they are making boilers. Of course, BHEL is government ownership, not as a sovereign authority they are borrowing. They are borrowing as a commercial undertaking. So, suddenly if they ask that question, even if public sector undertakings borrow, that will also come under ECB only. Okay, now coming back to this question, when ECB, easing conditions means come relax, you can borrow any amount, then more dollars will come, it will prevent the slide. Okay. Then following an expansionary money policy, expansionary means what? Just now we saw this whenever inflation, this is contractionary. You can write it in this is contractionary money policy. Whenever RBI increases, they are reducing. Whenever there is a recession, they will follow expansionary money policy. Whenever to bring the economy out of recession, they will go for expansionary money policy, means they will reduce the rates. Okay, but whether they will do it, already 80 rupees is equal to $1 has become 85, 88, 90. Then further if you are going to expand, more rupees going to enter, then 90 is equal to $1 will become 91, 95, 100. Yes or no? Are you understanding? So will they follow that method? Will they or no? No. So which one of the following is not the most likely measure? They will not follow an expansionary policy, because then further rupee will enter the economy, further rupee will make the dollar more costlier. 85 is equal to $1 may become 90 is equal to $1. Is it clear? Yes or no? Now consider the following statements. RBI manages and services Government of India securities, but not of any of the state government securities. Treasury bills are issued by the Government of India, and there are no treasury bills issued by the state government. Treasury bills are issued at a discount from the par value. Now, this is also the which year question? 2018. Okay, and again it will keep coming. Now, just again I will give you one formula only then. Yeah, see, there are three types. Government security means government is securing. Okay, now three things. Now government is suddenly wanting money. Okay, now April 1 starts. April 1 onwards, new financial year has started. Yes or no? They have to pay for all railway line is there. Engine drivers are doing, track maintenance is happening. They have to pay, they have to do the routine expense. Then they have to pay for Indira Awas Yojana, houses are getting built. Yes or no? But there is also a concept called March lapse. Yes or no? By March end, the budget gets over. There is no more money. New money you have to again, from the new budget only. New budget, yes, first is tax. People immediately April 1 for next financial year, who is going to pay? They have to wait, na? First quarter ends in June 30. Then only first quarter many corporates keep paying the tax. Yes or no? But government has the expense. but revenue is not there. Yes or no? So, are you understanding what I am saying? Expenses start from April 1, but revenue will wait. Taxes, most of the people pay March end only, that tax. Most of your parents, if you ask, March end only they will pay the tax, February, March only. They will used to buy LIC policy, this, that to manage tax, to bring down the tax, but most of the taxes are paid. Corporates, that is why every quarter they have made it mandatory. We have to pay. Whatever you are supposed to pay, this year 100 crore is the tax, means every quarter you have to pay 25 crores. You have to calculate now itself, anticipate and keep paying. Now, government wants money now. It doesn't have. So, what government does is, boss, I promise to pay the bearer a sum of rupees 100 crore. They are releasing one government security. They will say, okay, April, May, June, how many days? April is January, February, March, April. April is 30, May 31, June 30. Yes or no? Totally 30 plus 31 plus 30, how much? 91 days. So, this is called 91 days treasury bill. Okay. I promise to pay the bearer a sum of rupees 100 crore. Now, you come buy, then someone is buying at say 97 crores, this. Say some bank is buying, okay, I will buy that security. 97 crores, now the bank will, they say some bank, say SBI is giving to Madam Nirmala Sitharaman. Madam Nirmala Sitharaman is taking 97 crores and giving this security. What is there in that letter? I promise to pay the bearer a sum of rupees 100 crore. So, the face value, whatever written on the cover page is 100 crore. Issued at discount at a reduced price, 97 crores. Now, this SBI manager who has bought it after 91 days will go and give that paper and get 100 crore from Madam Nirmala Sitharaman. Now, of course, RBI manages it on behalf of Madam Nirmala Sitharaman. Now, what happens now? This interest is this difference 3 crore. This is not 97 crore, it can be 98 also, 96 also, it is called auction. Okay, on depends. People will say 91 crore I am ready to buy, ICICI will say, Axis say no, I am ready to buy 93. Finally, people will say, boss, I am government boss, please buy more. Finally, okay, 97 final, anyone else? No, 97 over. Okay, 97 crore you give, they get 97 crore, give the security, 3 months later, 91 days later, they will come. This is government is borrowing. Government means treasury bench. So, this is called treasury bill. Is it clear? Now, 91 into 2 is how much? 182 days. There is another treasury bill called 182 days treasury bill. Into 2, how much? 364 days. So, government can borrow, there are 3 types of treasury bills, 91 days treasury bill, 182 days, 364 days. This is one government security, because government is telling, I promise, they are promising. So, it says government is giving. So, when government promises, it has to give, na? Whether we can give doubt government? No, government will definitely, because they print also and give, no problem. So, definitely they are going to give. So, this is also called as gilt-edged security. Gilt means gold. Like a gold, it has value, nothing to worry. Now, if suddenly in the month of, say, only 3 types of treasury bills are there. One is 91 day, 182 day, 364 day. If government wants for 91 days, government wants, then they have to pay interest for how much, how many days? 91 days. Yes or no? That interest is this difference amount. Okay. Now, suddenly in May month, Madam Nirmala Sitharaman wants money. But she knows by June 31 she is going to get collection. Anyhow, first lot from corporates will come. All corporate tax is going to come. But what is the option she has? What option she has in this treasury bill? Which option she will choose? Usually, if they want money, only 3 options are there. What options are there? 91 days or 182, 364. But she knows she can replace within 45 days. Because May end means within 35 days she can repay. Nah? But what option she has now? Minimum what? Unnecessarily so much interest. Nah? Then they told, why unnecessary? This is only 3 types. These are all treasury bills. Then they introduced, okay, in case if lesser than 91 days, then they introduced a new concept called cash management bill. Cash management bill. This is also the same. I promise to pay the bearer a sum of rupees 100 crore after 45 days, after 70 days, after 20 days. It is lesser than 91 days. A new tool for the government to borrow. Is it clear? It is also government security. So, government security, first type is what? Treasury bill. 91 days, 182 days, 364 days. Second type is cash management bill. Whenever the repayment is, the tenor of that security is less than 91 days. Third is, I promise to pay the bearer a sum of rupees 100 crore after 5 years, after 10 years, after 2 years, after 1 year. Yes or no? This is less than a year, na? 364 days. This is also less than a year. Yes or no? But whenever the repayment is more than a year, it is called long-term loan. Whenever repayment is less than a year, it is called a short-term loan. Always short-term loans are done in money market. So, these two are money market instruments for government. Money market, they are repeatedly asking. We will anyhow go to that area now, little later. We will cover almost every topic, I hope. Now, but more than a year, 2 years, I promise to pay. That is also government. Who is promising? Government. Now, but it is more than a year. That is called as, what is it called? Government bond. Whenever they use the word bond, it is nothing but it is more than a year repayment. As simple as that. Is it clear? So, three types of government securities: treasury bills, cash management bill, government bond. Is it clear? I promise to pay the bearer a sum of rupees 10 crores or 100 crores after 5 years, after 10 years. Gold bond. Nowadays it is sovereign gold bond. This bond, repeatedly bonds are coming. All tenure will be 5 years, 7 years, 10 years, like that. Okay. Bond means more than a year. These three are government securities. Is it clear? Now, what else can come in this? Who can, state government is there, na? Can they release treasury bills? No, boss. Only central government. State governments, whether they can borrow under cash management bill? No, boss. Only central government. Okay? Whereas government bond, both central and state can do. So, central government can float treasury bill also, cash management bill also, government bond also. Whereas state government, it can borrow only government bond. Who does this for on behalf of central government or state government? RBI. RBI only, whether central government or state government, RBI only does. But RBI has told, boss, central government is having all money, only peanuts are there for state government. Always remember that. That's why always all plead, no, every state, I have got flood, I have got cyclone, I have got this, that, give me money, give me money. Because from every state, all major taxes go where? As per our constitution itself, main taxes are all with the center only. Union. Okay. So, now RBI has told, no, treasury bill and all, like only central government. Cash management, only central government. Government bond, okay, center and state. Whenever state government this bond, usually called state development loan, they will call state development loan, but this much is bond only. They use the word state development loan. Okay, repayment is more than a year. I think only this much should come in this area, right? Yeah. Now comes the question. Yeah. RBI of India manages and services Government of India securities, but not any of the state government securities. Do they manage only the central government's government of India security only they manage, or state government also they manage? Both they manage, boss. Yes or no? Yes. treasury bills are issued by the government of India and there are no treasury bills issued by the state governments. Is it true or false? True or false? Treasury bill only 3 times, 91 day, 182 day, 364 day. Can state governments do? No. Cash management bill, can state government do? No. Then this is true or false? Treasury bills are issued by government of India and there are no treasury bills issued by the state governments. True or false? True. Yes or no? So, 2 is there, 1 is not there. In fact, my mentality is I wouldn't have even read of the second and third. RBI manages and services government of India, only immediately I will say that it's false. So, immediately I will go, I will see, oh, A is not there, okay, because 1 is there, B is not there, sorry, C, D is not there. Yes or no? Immediately I would have read only third statement. For me, I am always time constrained, boss. I am someone who has never failed prelims. How can I fail in prelims? Probability I am increasing. Are you understanding? My intention of telling you is not to boast about me. For you to learn that, immediately increase the probability. 50% I have removed. Na? By one statement I have arrived at 50-50. 50-50 probability is going to favor me. Out of 200, 100 I am whether whatever general, OBC, SC, any category I will clear. Yes or no? So, immediately always have the intention of increasing the probability of thing. Okay. Now, answer is between B and 3. Let us read 3. Treasury bills are issued at a discount from the par value. Treasury bills are issued at a discount. Where is that? I have made it na. Okay. I told you na 100 crore rupee. I promised to pay bearer 100 crore. 100 crore is face value, but issued at what? Discount, 93, 95, 98, it is on auction, okay? Whereas par value, on par with the face value, face what it is written, 100 crore. What it is issued, 97, 98 based on auction. People, I will always ask them to buy for more, 98, 19 because I can pay lesser interest. Coupon is less, coupon means interest I am going to pay. So, this is right only, on par with the face value only. So, statement 3 is treasury bills are issued at discount from the par value. True? So, answer is 2 and 3. Yes or no? Answer is C. With reference to India's 5-year plans, which of the following statements are correct?